Got the first full month of data for the new year. So let's review January. Let's see what's going on. Jump right into the stats. Mortgage rates have increased a little bit. So they are now in the high sixes. Still, that is better than the 8% that we saw back in November. Um, Overall, the consensus is that rates will come down more later this year. Hard to say exactly where. That is the big question. Personally, I don't expect that we'll see anything in the threes or fours. I think it's very possible that we could see some mortgage rates back into the high fives, maybe mid fives, but that's a long ways out. So, as I always say, you make the decision today based on the information that you actually have and what you can control. Don't make decisions based on potential future information. Sadly, I do think some of the buyers that opted for the 2-1 buy downs may be wishing they would have opted for a permanent buy down. I think the folks that did opt for the permanent buy down may be a little bit happier in the decision long term until rates come down more, and they may or may not have the potential to refinance. We'll see how that goes. So now, mortgage rates out of the way, let's talk about the Fed and their short-term bank rate. They did indicate that they are going to pause on their March meeting. That could change, but a high likelihood that they are going to pause, which moves the potential for another rate cut out to May. So we will see how that goes. Their decision is totally going to be independent on, or totally dependent on the state of the economy, on inflation numbers, unemployment numbers. And this begs the question, based on what some experts have been saying, are they going to do a 25 basis point drop in May, or are they going to have to increase that and do a 50 basis point cut in May based on skipping or doing a pause in March? So we shall see. That's going to be interesting, and obviously that's a long way off. A lot can happen in 2.5 months. So let's talk about real estate. January was off to a very strong start. We saw a lot of activity out in the marketplace. If you are one of the active buyers that ran into a multiple offer situation, you are not alone. There were a lot of offers flying around in January. And we're still feeling that a little bit. So, Tri-County area. Homes for sale continued the winter trend of contraction. So homes for sale dropped by 10.1%. Sold homes also dropped by 16.9%. However, Tri-County area, the Pendeds were up by a whopping 35.8%. So lots of buyers out, lots of buyers motivated, making offers, properties going into contract. Now, the one thing I will say, that pended number does include properties that went pending, fell out of contract, and went pending again. That would count as 2 pendeds for the month if they occurred in the same month. So I always take those higher pended numbers with a little grain of salt. Days on market increased from 41 to 44 days, so it took a little bit longer to sell, not much, but the list price to sale price ratio did hold stable again this month at 97%. So that has been where the market's moving. Average and median sold prices both declined in the Tri-County area. The median sold price dropped by 3.3%. So for the Tri-County area, it is now down to $550,000. Early indications are showing that we may see the median home price actually increase for the month of February, but obviously we won't have that information until early March. Inventory levels still holding stable, 1.8 months. That's right around where it's been targeting, between 1.5 and 2 months, basically for the last year. I do like seeing that over the long term. That shows a little bit of stability in the market, which is really, in my opinion, a great thing. So let's jump to Placer County. Same thing, overall trends are similar. So we saw an even bigger jump in pendeds in Placer County. So they're up 49.2%, which is huge. Lots of activity happening. That does present a challenge in the market since the homes for sale are down 13.4% in January and the solds are down 16.8%. So that is a result of the lower pendings and lower activity that we're seeing in November and December. So what we really need right now with all this pended activity, with all the buyer activity, we need more inventory. That's across the board. So if you're a seller and you've thought about moving into something else, moving out of state, need to liquidate property for family, whatever the case is, give us a call. We'd be glad to help you get that cleaned up, properly prepped, showcased really well, and get that sold. So in Placer County, marketing time has increased from 45 to 49 days. I do expect that to change as the market starts to gain some traction as we head into the spring season. In Placer County, good news, the list price to sold price ratio actually improved by 1%. So it went from 96 up to 97%. So good news there. Median and average home prices also fell in Placer County specifically. Median home price is down 1.9% and it is down to $620,000 for the month of January. We could see a shift heading into the spring market and we'll see those prices start to pick back up. But obviously, like I said, we won't have that information until the beginning of March. So we'll see how that goes. In Placer County, the months of inventory increased. It went from 1.8 to 1.9 months. That's great. It's still continuing that trend, 1.5 to 2 months of inventory. I like to see the stability, but overall, it would be great if the market had some more available inventory. So overall, I expect 2024 to be a good month, or sorry, a good year. I don't expect it to be a great year, but good's pretty good. So buyers and sellers should be balancing each other out this year. I think as we see rates come down, it's going to bring more buyers back into the market. However, it will also bring more sellers back into the market that say, hey, it wasn't worth me giving up a 3% rate and moving to get an 8% rate, but it's worth giving up this 3% if I can at least get, maybe a low 6 rate. So I don't think buyers or sellers are going to have more leverage than the other. I think overall we're going to see a pretty balanced market between the two this year. Obviously, there are a lot of things that could change that, but that's my expectation for now. Some good news, we're still seeing good home builder demand. Home builders are still building a lot of inventory, but it's not enough. Overall, the home starts for 2023 ended up just over 56,000 throughout the state. To give you a little context, back in 2005, 2006, we were closer to, I think, 150,000 home starts. So we're way off of those numbers, but we were building too much back then. So again, balance is key, but we are still a little bit light for our inventory. There was legislation to help create accessory dwelling units, or ADUs, right, where somebody puts a 1,000 square foot detached home in their backyard if they have a huge yard. That was intended to help create more inventory, more housing, more affordable housing. However, the challenge with that has been the cost of construction is just prohibitive. So we have not seen as many ADUs as I think everybody was hoping to see. So that's it for now. We'll keep you updated on everything else. Check out our other videos on other topics and neighborhoods. And thanks again. Please subscribe. If you have any questions, reach out directly.